Welcome back to the Financial Independence Network. We'll be exploring our Friday series about the 4 steps to financial independence. Today, we'll be discussing Step 1, Protection Management. If you haven't watched the first video of this series, click the link in the description before watching this. If you're excited about achieving financial independence, hit that like button. Also, describe in the comments what financial independence means to you. Financial planning is a serious matter, but it doesn't have to be all doom and gloom. In this world full of surprises, it's essential to have a safety net to catch you when life throws you curveballs or a flying refrigerator. That's where an emergency fund, term life insurance, auto insurance, and home insurance come in. An emergency fund is like a trusty friend who has your back in tough times. It's a savings account for unexpected expenses like medical bills, home repairs, and car repairs. It should contain 3 to 6 months of living expenses, giving you a cushion in case of emergencies. And the best part, you don't have to take this friend out for fancy dinners because this money is for emergencies only. Having an emergency fund is like having a superhero power. You'll feel invincible knowing that you're bulletproof in case of a financial hardship. No more relying on credit cards or loans, which are like evil villains who can keep you in debt for years. And you won't have to touch your retirement savings or other investments, which is like sacrificing your superpowers for the greater good. Now, let's talk about life insurance. It's like a superhero in disguise, protecting loved ones in the event of an unexpected death. It replaces your income and covers expenses such as mortgage payments, funeral costs, and other bills. A term life insurance policy should provide coverage of 5 to 10 times your annual income, ensuring that your family is taken care of even if you suddenly become a superhero in another dimension. The younger you are, the lower your life insurance payments will be. It's like getting a discount for being a superhero in training. As you age, the risk of death increases, and so do insurance premiums. By securing life insurance at a young age, you can lock in a lower rate and ensure that loved ones are protected for years to come. It's important to consider your personal circumstances and choose a policy that fits your needs. For example, if you have children or other dependents, you may want to consider a policy with a higher death benefit to ensure they are taken care of. And if you're single with no dependents, you may only need a smaller policy to cover final expenses. That way, you'll have a proper send-off, like a superhero who deserves a farewell fit for a legend. But wait, there's more. Auto insurance and home insurance are like your trusted allies, protecting your assets and keeping you out of harm's way. Auto insurance covers you in the event of an accident, and home insurance protects your home and belongings from disasters such as fire, theft, and natural calamities. Without them, you'll be left exposed to the elements and lawsuits. In conclusion, having an emergency fund, a term life insurance policy, auto insurance, and home insurance are the building blocks of a solid financial plan. They provide financial stability and peace of mind in times of need and can help you achieve your long-term financial goals. Don't wait until it's too late. Start building your emergency fund, secure your life insurance coverage, and protect your assets today. Your future self and your loved ones will thank you for it. And who knows, you might even save the world, or your own world, in the process. That concludes our video. If you enjoyed this information, please comment, like, and share. Also, make sure to subscribe and hit that notification bell so you don't miss our Friday series on the steps to achieving financial independence, where next week we'll discuss Step 2, Debt Management. Thanks for watching.